Good morning to you. We're all trying to get a sense of what's going on with tech right now, especially given the price or given what Jay Powell said, and now people are back to the races. Does that make any sense to you?
It makes a ton of sense, and I want to put Powell's comments into perspective. Is that he really didn't say anything new yesterday. What was material was he did not pull a Jackson Hole, hinting that rates would go higher than what investors were expecting. That was what really threw his last comments in the market into a funk. We didn't get that, which was viewed as a positive. I think the market has a general sense that the rate hikes are for the next 6 months are in place. But I do want to point out what I think is going to be a change in the conversation around the Fed's comments. We've been so focused on that over the last 6 to 9 months, and understandably so, especially for tech investors, given the impact on the discount. But I actually believe that Chairman Powell's comments are going to become less important. What's going to become more important is I think we're entering a phase where earnings matter the most. Right. And just to bring it full circle here, Andrew, is I think that ultimately the bigger question to me is less about what's going on with rates and inflation, more about what's going to happen with earnings, and I suspect that they'll be going down in the next couple quarters.
Yeah, I want to pivot the conversation because yesterday at the DealBook conference, I spoke to Netflix's co-CEO, Reed Hastings. He explained why he changed his stance on adding advertising to the platform. I want to get your reaction.
What I failed to understand is that there's a lot of TV advertising that now couldn't find the viewers because the 18 to 49 segment had moved online. They were not watching linear TV. And so the advertisers are desperate for connected TV or internet TV solutions. So that's the real thing that I missed, and that we didn't have to steal away the advertising revenue. In fact, it was pouring into connected TV if the inventory is there.
Hey, Gene, sounds like he actually would have liked to do this years earlier, he now says, if he could.
Yeah, quite a surprise, and that was different than what he had been saying publicly in terms of these. But I guess hindsight 2020, and I would just put his comments into perspective about the bigger arc about what's going on at Netflix. Near term, they're doing a great job of taking some money that has been on the table, whether it's advertising revenue. They're going to be cracking down on the piracy and the sharing of passwords. There's a lot that they can do there. That's all in the plus column for Netflix over probably the next 12 to 6, 12, 24 months. So applaud that piece. I do have some concerns longer term about just the market and ultimately the competition within this. But yes, he wanted to do it before, and I think Netflix investors will be happy over the next 6 to 12 months. Not only with the ad market, but also the privacy or the password sharing.